Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief today. We're going to have a Friday strategy session. We're going to cover up the local news, the global news, the FOMC news. We're also going to take a look at the inflation numbers that dropped a little bit earlier today. We've got some movers and shakers that are really starting to develop nicely. We've got a trade idea in the Great Britain pound Australian dollar that is now live. We would definitely want to be all over that. I'm going to give you sort of a good look at what a great stop-loss location can do and how that can keep you in some of these trades where a lot of others get knocked out. We've got gold going to 3,500 like we sort of talked about. It's heading that way. And then we've also got silver on a big-time rally right to $40. We're at an inflection point in the markets. Right now, everything is sort of – think of this as like a maybe the calm before the storm. There is some action out there, but it's not big. And what we've got is we've got a season that – the action gets big. We will see trends. We will see breaks. We're just days away from the fall trading season starting. I'm going to talk about Labor Day closure on Monday. That's big. You got to realize that, hey, maybe Monday's not the best day to be trading. Definitely don't trade any kind of orb strategy on Monday. Don't do that. As far as crossovers, I would avoid that as well, but we can still strategize. I'll be here live same time on Monday, even though the markets will be closed. So a lot going on today. I want to get right out to price action here, though. I want to get out to the VIX here relatively quickly. I want to show you what's happening. Going into the weekend, we've got the VIX sort of rallying up above 17. That's very low historically. It's very, very low. It's one of those things that you got to understand. We're just not high. We're just not high there. I mean, you can see we've got a lot going on here in this VIX. I don't know what all those indicators are there, but as far as our VIX goes, we've got a long-term average somewhere right around 21. We're below average. We're below average in the VIX, and what that suggests is that the fear in the market is low. Bids are hitting the market. We really are starting to look at the top side of risk assets, especially the S&P 500. So I definitely wanted to start with that. That's a big one right there. The VIX sort of you've been negative now. We had the huge month there in April on the tariff fears, and then we've also got a big-time sell-off here, 4 in a row, 4 months in the VIX. We're back down towards those historical lows beneath the historic average. That is very, very important because things have stabilized. As the VIX goes down, the market goes up. Typically, that's the way that it works. All right, one more price action here on your MT5 platform, Euro USD. I want to go ahead and drop that in, and you'll notice on the daily, our bullish trend line is sort of in an interesting position now. Now, I sort of said, listen, if you're still holding shorts off of this trend, it was a nice initial break. We got some pretty good price action. Then Jay Powell spoke, and then we sort of failed right there at that trend line as topside resistance, came back down. Now we've got an inverted hammer showing up on the daily. Ooh, that's a tough one to argue with. I don't particularly like hanging around in those environments just because those hammers, those are a big deal. So one of these days I'm going to do a video just on chart patterns and do that hammer. We did a lot of chart pattern work in the Trading Academy at How to Trade, a lot of pattern work. But one that we neglected was hammers. And I'll tell you from personal experience, I don't care what the time frame is, the hammer is important. It's important. It's a reversal signal, and it's one that you need to be aware of. So right there, that daily hammer showed up after really a nice sell-off early in the day, and that rebound, potentially you could have bailed out of the trade there, and I wouldn't have blamed you. But right here, I'd say your stop-out point has to be above Jay Powell's statements from last Friday. Has to be right up in there. Let's go ahead and see if we can get an exact figure on it. So if you're holding shorts here in the Euro USD, stop-out needs to be somewhere right around 117.50. I would let it bleed probably another 50 pips, whatever we're at, 117. What are we at, 117.01 right now? So 117.50-ish would probably be your stop-out point. It's just not going very well. We sort of knew that the U.S. dollar wasn't ever going to blow up and be as strong as it was probably, last year before. And a lot of that has to do with our rate cut expectations we're going to talk about now. But the dollar has just been getting hammered all year long, and nothing's changing. So I had higher expectations out of this break. Still was a pretty good trade, and now we're going right back up to that trend line. Not necessarily the best situation to be in, especially if you're a dollar bull. And I don't know many dollar bulls that are still out there. I really don't. So I want to welcome everybody back. Yes, sir. Good to see you. Yes, sir. Welcome. Let's see Lita. Good to see you, Lita. Always a pleasure. Tuku. Good to see you. This is one of those days where there's a lot of news. And our price action does not reflect the news cycle. There's a lot of news out. Lisa Cook, we're going to talk about the FOMC member. Big developments on that front. Another criminal referral came in from towards the Department of Justice. That's a big deal. We've also got core PCE and PCE Price Index, the latest round of the Fed's inflation numbers. We're going to look at those as well. Interesting numbers. I don't really agree with what the headlines are saying, but that's okay. The numbers tell the story, and we're going to go ahead and dig into the stats. As long as we have hard stats, we have the ability to interpret them, and who's to say that our interpretation's any better or any worse than anyone else's? Always remember that. Every time you place a trade, whether you decide to buy or whether you decide to sell, doesn't mean that your idea is any worse than anybody else's. What makes your idea good and your trade good or bad is how you handle yourself once the trade's down. Once the money's down, and it's what I call being in the pocket. Once you're in the pocket, that's when it matters. That's when everything you do is magnified, and that's what differentiates being a winner and a loser. I mean, let's be real honest with you. I mean, I was actually having a conversation with a trader earlier today who had a bit of a tough run on today's session after running really, really well for several weeks. And I've been in those situations. I will tell you that my number one problem when I start losing is that I overtrade. Now, sometimes I'll put on positions that are big, starting to chase money. I don't really view that, and this is going to sound completely counterintuitive to everything you've ever heard, but I don't really view that as being a problem. I mean, I really don't. I mean, when I decide to say, okay, let's say I'm going 1% on these. Okay, I lost one. Well, this is still a strong trade setup. I'm going to go ahead with my normal 2 or 3% on this trade. That's not a problem for me. As long as I have planned what I'm going to do and I have a scope, I have parameters that are govern my risk management and the trades I'm going to take, I'm not worried about going on tilt and losing everything. I'm really not. Where I've run into trouble in the past, I'm just going to give you the beats out of my own playbook here. Where I've run into trouble is when I start losing, the losses compound. Meaning, if I lose once, honestly, it's not a problem. I keep trading for the day. However, if I lose twice in a row, something's up. Something's wrong. I'm either not seeing the market correctly, I'm not applying my strategy correctly, or the markets are irrational. That's the way that I see it. If I take 2 losses in a row on the day, I'm out. That's a wrap. We're going to bring it in. We're going to put a tourniquet on it. We're going to come back tomorrow, and by Friday, we're going to be profitable. That's the idea. That's my entire approach to the market. That's how it's built, is to start slow on Monday, pedal to the metal Tuesday, Wednesday, Thursday, start downshifting on Friday, preserve my momentum going into the next Monday. That's how I figured out how to survive in these things for the last, 13 years, 14 years. Now, it took a while to get to that point, but once I got to that point, I feel very confident that I'm going to turn a profit each and every week. Now, is every week profitable? No. Every week's not profitable. We had a bad one back in July. That wasn't much fun. Wasn't. Got whacked bad on a Wednesday, fought back, ended up going into the clubhouse Friday, not profitable. So for me, when I start losing, the number one rule, slow down. I slow everything down. And when I mean losing, 2 bad trades in a row, 3 bad trades in a row, 2 losing days in a row, 3 losing days in a row. If it escalates to that point, I shut it down. This is a marathon. This is not a sprint. You do not work for hedge funds. Well, there might be some hedge fund guys working out there. I've seen some people on CNBC that are stealing some things out of these streams. Nah, I'm just kidding. But big picture, this is a marathon. And you have to slow down when you're losing. Slow down. Back-to-back losing trades, I'm out. I don't care what anybody says. They say, Shane, what are you doing the rest of the day? I'm going to go to the gym. I'm going to game plan and get ready for tomorrow. Make a video or something. Maybe do some writing, write in my journal. I don't do that much anymore. I write, all my writings pretty much go to you guys. But number one rule, when you're struggling, slow down. Slow down. Now, we'll talk about when you're winning some other time, but there was an old movie, Into the Pit, they called it, and one of the guys on In the Pit, he was a bad alcoholic, but he was a very good trader. And he basically said the public doesn't understand it. When you're winning, bet more. And I'm coming around to that. Because when you're playing with house money and you're ahead, that really is the time to set the apple and go for it. If you're going to go for it, you go for it with other people's money. You do it with someone else's money. You don't do it with your money. That's the reality of it. One last thing I'm going to say about this. This is a little preemptive psychology talk here, and then we're going to get right into the trade ideas and all that jazz, and I'll answer any questions you have. Today's a great day for it. We do have 2 news events we have to cover, though, or I'd be doing you guys a disservice. Back in the 1940s and 50s, don't ask me which, I'm not sure the exact year, there was, I believe it was an Eastern European mathematician. His name was Willy Feller. Willy Feller dedicated his life to something called the clustering effect. And essentially, the study was a coin flip study. And we're talking about flipping coins hundreds of thousands of times to try to develop tendencies in the probability distribution of either pulling a long string of heads or a long string of tails. Now, what we think, the way that we see probabilities, the way that most people see probabilities is very simplistic. It's saying, okay, I've got a coin right here. I've got a quarter, side of its heads, side of its tails. 50% chance it lands on heads, 50% chance it lands on tails, okay? That sounds pretty straightforward. It's either going to be heads or tails, right? Okay, well, what Feller found is something called the clustering effect. And over time, given enough flips, found that when you started throwing heads, you would start throwing clusters of heads. When you start throwing tails, you'd start throwing clusters of tails. And this was observable over hundreds of thousands of trials. That always stuck with me. And I said, wait a minute, it's a 50% probability. Every time I flip the coin, it should be 50%. It's not true. Sometimes it's going to come up heads. I've thrown 10 heads in a row. Or you have a better chance of throwing heads or tails on the next one. Conventional wisdom says it's still 50-50. Some people believe that, no, it's going to be tails because tails, it's due for tails to come up. What if the opposite was true? What if heads beget heads and tails beget tails? What I'm saying is this. In the markets, we don't deal in 50-50s. We gear our strategies to either be like a 30% winner taking big moves or a 70% winner taking small moves. What I'm saying is, given those differences in those odds probabilities, you are much more prone to the clustering effect than a 50-50 shot. So if you're in a situation where you find yourself losing and losing and losing, stop. Losing begets losing. You lose 2 in a row, back to basics. Do your analytics. Make sure that your next trade's a winner. Break that string, and let's get back on the winning track. Willie Feller, look it up. It's fascinating stuff. The clustering effect is so next level statistics. It's next level stuff, and it's way over my head, but I tend to believe in it. Alan, good to see you. Alan, welcome. Let me see. Kachua, good to see you. Tina, good to see you. Tina, welcome. All right, guys, let's go ahead and get on with it. That's enough of a speech for right now, but a good Friday psychology session. Welcome to the Switch Markets community. If you want to capitalize on any of these trade ideas and or concepts, head on over to switchmarkets.com. Take a look at their account suite. Lots of content hitting the Switch Markets YouTube channel. That's going to be coming in the next months. I mean, we're going to have that thing packed. Also, daily live streams, everything you need. We're also got a webinar dropping soon. Once that's cut and they're ready to release it, I will tell you where to find it, and you can go ahead and check that out, and that's on the power of AI, and I present it and show you how to use the powerful algobuilder.com platform, which is complementary to Switch Markets clients. You may want to check that out if you're interested in how AI can impact your trading. All right, trade update. We got to start off with a trade update. I don't run from the losers. We talked about that yesterday. I don't pump the winners, and I don't run from the losers. We had a very good trade on WTI early this week. This trade right here is either going to turn out really well for us or we're going to end up losing it. But right now, I feel very good about our stop loss location. I mean, very good about it. Right here, what do you have? We got a Great Britain pound, Australian dollar, and we're looking to buy somewhere right around the two. Right around 206.50, somewhere in that zone. It's right there on the key levels inside the trading room. Just go ahead and check out our analytics thread, or just click a follow me, and you'll get those directly to your inbox. But right here, this is what's happened with our trade. Now, it's not necessarily the prettiest chart in the world, but I do want to go ahead and show you exactly what I'm looking at here with regards to our stop loss location. This trade was for about 60 pips, somewhere in there. So the stop loss, I'm talking in rough numbers here. 206.50 something was probably our entry. I know my stop loss was somewhere right around 205, probably 85-ish, maybe low 90s, 89. I don't know the exact number, but that's where our stop loss was. Now, those trade ideas are pretty much built on at least a 1-to-1 ratio. The idea being that if you do say, okay, we're shooting for 60 pips here, that's probably the stop loss as well. I don't go any lower than 1-to-1. That's a very, very tough proposition to win. But this stop loss right here is proving very, very good to us. You say, Shane, this trade's behind. You're losing. And I go, well, hang on a second. We may, in fact, lose the trade. I'm not saying we won't lose the trade. I don't know what's going to happen. But I do know this. Price crashed today, went down there and checked out 206 even, clicked 205.99. It took a big retracement back up above 206, right back to 206.50-ish. So when we go down to, say, like a 30-minute chart, you'll see exactly what I mean. Okay, right here, this was our initial approach to our entry point. There was your low, and then there was our initial bounce. Bounce was up to about 206.59. That just isn't the move we're looking for. We're looking for a move back up in here somewhere, back up in here exactly. So what do we have happen, though? Okay, so we got compression. We broke beneath that horizontal support zone. Broke. What happened? 206. 206 is huge. Why would 206 be important? It's a key level. It's a big round number and a key level. Now, I'm not saying that you can just trade big round numbers and key levels by themselves. That's problematic in a lot of ways. We made a key levels video. I typically like to have a technical indicator or something in the vicinity that gives me an opportunity to sort of sort out the key levels, the good ones from the bad ones. But the big thing to remember is a big round number, like a 206 even, is going to be important. It's going to draw action, and that's exactly what happened. We saw the majors selling nice compression. Look at this. You got about 90-minute, 120-minute compression, and then a break right down to 206, and then a bounce. Right there was our bounce. There was our big sweep higher. And then what did we have? Some compression right at our key zone where we're long from, and the price is sort of trickling down. The jury's still out on this trade. However, if it does go back down under 206, we're probably going to lose it. I think that this sort of was our last stand. We got a nice bounce off of there. Now we're looking for a daily close. If we get a daily close up around that, maybe 206.50-ish, if we get a daily close up in there, I start to get real confident about the potential outcome of this trade. And that's one of those things that you guys, when you do this long enough, you will be able to do that and go, well, right here, I was looking at this and I go, well, we're screwed. I mean, we're in big trouble here. We're going to get wiped out, especially when I saw that compression right there. When this compression started setting up and the market started tightening up right around, 206.10, somewhere in there, I go, man, if this thing breaks down, we're gonzo. Well, it broke down, hit 206. That was sort of the last stand. I mean, that was Custer's last stand right there. Everybody dug in, and then you got a big sweep higher on heavy volumes. Ideal timing, really, as far as the U.S. trading day goes. As far as the Great Britain pound and the Aussie, it's, sort of towards the end of the London session. Bang, got a nice big move, and now we're just sort of tapering off. I would love to see some accumulation to close above this level. That would be a very, very positive sign for this trade. But if we trade down and we take out that 206 even, man, look out. Look out. I mean, that's not going to be very good for us. So, like I said, we don't run from the losers here. We took some heat. It's not dead yet. I mean, it's not looking great, but it's not dead yet. For me, I'm very, very interested in potentially getting a bullish close and maybe being able to cash in. But we don't just focus on the winners here. We lean into the losers. Earlier today, before we get on to the next topic, I got called out on YouTube, which was pretty good. And the first thing is, I know, listen, everybody in this room, I've had some critics over the years that have been pretty brutal to deal with. But by and large, everybody just wants to learn and be positive. I like the criticism. I like the critics. I like people sort of talking, being very, very critical in scrutinizing everything that they see online. That's very, very, very important for you as a trader. You've got to be able just to separate the BS from the legitimate. And I understand that anybody on YouTube talking is immediately suspect. And that's the correct way to look at everything. That's how I look at everything. Everything I see online, I don't care who it's from. I don't care if it's from CNBC, Fox News, so the most reputable people in the world. I don't care. I question everything. And you should do the same. Shane, I don't agree with that. That's great. That means you're thinking, you're using your head. I took some criticism earlier today. It was on our 9 EMA video that was out there, and a gentleman came in and basically said, you don't know what you're talking about. You're dodging questions. You're not doing this. You're not doing that. You got no credibility or whatever. I want to be very clear if you're watching today. I invited you to watch this live stream. As far as credibility goes, credibility is up to you. I don't have to prove myself to you. I don't even worry about it. I know that I've proved myself to me already in the markets. And I want every one of the traders that are in the How to Trade community and in the Switch Markets community, or that are watching this stream right now, that's the level that you need to get at. You need to sit there and make a trade. And even when it loses, and there's always going to be somebody there going, I told you so, or that's not going to work, or that's not going to work. You just look them right in the eye and say, don't worry about it. You trade the way you want to trade. I'll trade the way I want to trade. Now, the basic criticism about the 9 EMA was, well, there's too many flat fake outs, and how do you know a good crossover from a bad crossover? And what I said was, well, we have filters, and check out one of those live streams where we trade the 9 EMA live. We use RSI to filter. We can also use Fibonacci's to improve our entry point and switch the risk versus reward. So the idea behind these strategies is to get you thinking. Take something like the 9 EMA, build it into your own. We have several traders in here that have taken the 920 EMA crossover and applied their own metrics and they made their own additions and built their own strategies. That's what this is all about. That was one of the first things that I was taught as a trader was, hey, listen, you can take my strategy and trade it all you want, but when you've built your own strategy, that's when you've done something. And I want everybody in here to take the building blocks that are out there and build your own strategy. Make something that's intuitive and user-friendly for you. Maybe now you're doing business with signal providers and things, and that's great. No problem with that as long as you're making money. But in the future, when you're in this game long enough, you'll start to think about, well, I could do this a little better this way, or I could do this a little better this way, or I really don't like Fibonacci's. I like Fibonacci extensions. We can do better that way. Go for it. Creativity is your number one asset as a trader. Be sure to use it. So like I said, I don't mind being criticized. I really don't care. As traders, you're all going to be criticized by family members, by other traders, by the online community. You will be. Don't sweat it. Know what you know and stick to it. And as long as you do that and you're true to yourself and true to your trading, you don't have anything to worry about. And that's what this really is. I mean, that's what trading is. I mean, every day you stare into the abyss. Anything can happen in a given day. And it's very important that you're able to handle yourself in the face of adversity and you believe in what you can do. If you do that, you don't need validation from anything else. Trader has to be very, very headstrong, almost stubborn. So I love the skepticism and the critique. Always question everything. Always. Never stop thinking. Never stop doing that. Don't just take somebody's word for it. Don't just take my word for it. Do your own work. Do your research. Get in there and say, I don't know, Shane. I want to trade this way as opposed to this way. That's what this is all about. As soon as you make that step, then you're a trader. So that's a big shout out to my fan on YouTube that was getting into me pretty good. I always laugh at that stuff because it's great. It comes from a good position, but you just got to be sure as traders that each one of your, by the end of this journey, you need to be sure in what you're doing and self-confident. That's it. All right, No Donation Friday, way behind. Andy Tong, good to see you. Shane, do you trade Elliott Wave? I used to trade Elliott Wave. I used to. I actually had an opportunity to watch when I was just a little tyke in high school. I remember watching Ron Silverstein work with my uncle Gary Vernier. Ron Silverstein was one of the heads over at Elliott Wave International. He was a bona fide Elliott Wave expert. True genius. I mean, he was a genius. And I remember watching him. They had graph paper and pencils, and they were graphing price action, and he was actually graphing the Elliott Waves. They would take the tick data, they would plot the points on the graph paper, and they would connect them with rulers, and that's how they were building their waves. There was none of this charting stuff that we have today. It was fascinating stuff. I got away from Elliott Wave. I went horizontal support and resistance levels, Andy. But good question. Let me see. I got a question in the live chat here, and then we'll get on with it. Alan, let's see. Shane, would you say that gold is after breaking through the ascending wedge on the daily, even the weekly? Yeah, we're going to get to gold in a second, Alan. Sorry I missed your question. Gold's up and away. I mean, I think we're going to 35. The real question is what happens on 35. All right, here's a little psychology for you. No Donation Friday. This is how I manage my weeks. If I have a winning week on Friday, I bank at least 50% of my profits. If I have a losing week, if it's small, I trade as usual. If it's big, I consider waiting until Monday to trade. Why? Because when I'm losing, things aren't going well. And when things aren't going well, we slow down. Slow down. Neutral. If I'm neutral, if I'm at scratch, it means I've had some winners and some losers during the trading week. It's not been a complete bust. We just aren't making any money. So you got your options. I'll let you do anything you want on Friday if you're neutral. You can trade as usual. You can reduce your leverage or don't trade at all. All of that's cool with me. It doesn't matter. Just be sure. I would be very careful if I was neutral on a Friday, though. I wouldn't necessarily want to get into a big hole going into the weekend. All right, week 35 today was a core PCE Price Index, and what we had was sort of a big litany and a list of numbers. I'm going to unpack them for you right here, and then we're going to look at some of the headlines because some of them were sort of disingenuous, but really this is the Fed's go-to inflationary metric. This is what the Fed does. The Fed gets in this, and they say, listen, we look at PCE, personal consumption expenditures, we look at the PCE index, and we typically do it on a 12-month period. So as far as the Fed's concerned, they're going to look at core PCE. That's really the headliner. That's the one everybody talks about. I don't worry about that too much. Realistically, I just look at the raw PCE numbers, but a lot of folks love core PCE because they strip out some of the more volatile items. I believe food and energy. I think it's like core CPI essentially, but this is what the Fed looks at. They look at this number more than they look at CPI. Now, 2.9% it came in at as expected, up from 2.8%. Really no surprise there. Month over month came in line with expectations at 0.3. The PCE price index year over year came in at 2.6%. That was as expected and in line with expectations. And then also the PCE price index month over month came in at 0.2, which is actually down from the 0.3 that we saw in June. Interesting stuff. Also, personal income rose just a little bit. That's typical with an inflationary cycle. Personal spending, 0.5. as expected, rose from the previous release. So you are seeing some spending and some income. That's always going to grow in step with inflation. Typically, when you start to see these numbers get out of whack, then we got a real problem there. As far as real personal consumption, 0.3%, I'm not really too worried about these numbers. Are very academic, and honestly, I couldn't really give you the breakdown. Retail inventories, whatever that means. Wholesale inventories, whatever that means. Honestly, these last three, they're sort of beyond me. I'm sure somebody out there is an expert on them. I'm not. As far as PCE goes, the PCE Price Index of the United States increased to 126.78 in July from 126.53. PCE Price Index averaged 60 from 1959 until 2025, reaching an all-time high of 126.78 in July of 2025. We're at all-time highs. No question about it. So PCE's in. This is the chart that scares everybody. It scares me. I watch it every day and I go, man, this is not good. That's a 45-degree angle year over year. Now, I want everybody to focus on a couple of things, and then we're going right to the gold and silver markets. We're going to look at an orb trade and take a look at crude oil and some DraftKings stock. But right here, very, very, very low, right? What happened right here in September of last year? Half-point rate cut. What happened here? Another quarter-point rate cut. Since those rate cuts, inflation has exploded. The Fed blew it. They know they blew it. The Fed blew it last year, cutting interest rates. And we're talking about more rate cuts coming right now. Interesting. This is a 10-year chart. And what you can see from your PCE, very slow and steady. Listen, PCE is always going to grow. Consumer prices are always going to grow. The nature of fiat currency is to lose its value over time. That's the way that fiat currency works. Why? Because central banks print more money, governments print more money, and the idea is to always keep everybody sort of happy. So you're going to make more and you're going to spend more and things are going to cost more. It's a giant illusion. It's a mind trick. I don't want to talk about it because a lot of people smarter than me don't believe that it can work forever. It's worked in this country for more than 100 years now. So I'm not going to argue with it. It's the way it is. This is the system we have. Now, what we have here is inflation that was relatively steady. This is why the first Trump administration, you saw an incredible amount of wealth sort of, I won't say redistributed, but a lot of folks made a lot of money that hadn't made any money before, really. And that's what happened. Why? Why was that the case? The case was because the money was coming in and the PCE and the inflation was relatively slow. This dip right here was COVID. Since COVID, it's been an absolute mess. I would say that this is the beginning of the new financial world, the new financial era where I don't believe you can save yourself out of these problems. You can never save enough money to cover inflation that's as robust as it is now. And I'm not trying to get down. I'm not being negative. I will tell you from personal experience, trying to save money over the past 5 years or 8 years, it's sort of a non-starter, and it's very difficult to even get motivated to save a penny because by the time that penny goes into the bank account, it's not worth anything. So this right here is something that people are not talking about. They should pull this chart on the news tonight and look and say, listen, that's very, very steep inflation. And since this inflection point in 2022, we're growing steadily. Similar to this right here. It's not as steep. The problem is there's no going back now. Prices are going to be permanently higher. It's the way it is. So what I was hoping to see, and hopes for children and losers, we don't hope around here, flatline. I wanted to see this flatline for a little while, let the world catch up and sort of do a financial reset on its own. Didn't get it. We're turning higher, and that's just the way that it is. And with the interest rate talk that we're hearing now, we're probably going even higher than that. So just a quick look at our Fed Watch expectations. 87% is basically where we stand now, and that's up a little bit day over day. Let's go and update it right now. But it looks to me like we're going to be in a real bad position with regards to inflation for the coming probably year, 18 months, something like that. 86%. So we do believe rate cuts are coming. So what does that do to gold? It sends it through the roof. It sends it through the roof. So there it is. There was our 920 buy on the 4 hour. We went on and on and on about this. This is Jay Powell coming out at the Jackson Hole Symposium saying, we're cutting rates. Damn it, it's time. We're cutting rates. We're tired of holding you guys' feet to the fire and yada, 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 whatever he said. Right there. There was your bid. There was your 4 hour bid right around 33.75, and now you're going ham to the top side of this 33.50. So from a not necessarily a pragmatic standpoint, but a practical standpoint. In the gold markets, there's a couple of things that you always have to really look at. Number one is going to be your long-term technicals. Always see, when you have chart patterns, be aware of them. This was our pennant. This is our monthly bullish pennant that we've been looking at for a long time. What's happening? Broke out. Last month's high was 34.38. This month's high right there is 34.50. 34.50 is today's high. 34.50. Do we explode over 34.50 or does 34.50 act as resistance? Right now it's holding up as resistance. Now, big picture, we're going higher. Why are we going higher? We're going higher because of the interest rates. We think a lot of the powers that be, a lot of folks that I've watched, fairly smart people that I respect, came out and said hyperinflation is very real, a very real possibility because the rate cuts are coming, and they're coming in a big, big way. So right there, there's your gold break. We've broken above last month's high. The pennant looks to be in jeopardy. Let's go down to a 30-minute chart and have a good look at price action. There it is. There's the breakout. So we started really looking at all the different ways that you can trade, all the different ways that you can sort of interpret things. As far as a daily chart goes, or an intraday chart right here, if you wanted to trade a 30-minute chart, for me it would be all about just grabbing a pullback. My game plan would have been real simple. There's your core PCE, something like that, pretty much. But I would have been doing this the entire day looking for pullbacks, and we never really got one. Let's go to a 5-minute chart. Okay, so right there was your beginning. You had a few pullbacks. Realistically, a pretty big breakout trend, though, I would say. So right there's your 6:30 a.m. That's going to be your PCE number. And realistically, I mean, you're just sort of walking up with price, trying to find a pullback. There was a pullback right there. It's 9:05 Eastern, 7:05 my time. So what about 20-something minutes before the market opened? Something like that. If you moved your Fibonacci's up to that spike, you had a pullback right in there to 62%. You can go from there to there, and you can see exactly how the trade's set up really the entire morning on the 5-minute. They've been there all day. Investors, what I'm saying, by doing that, I'm showing you that everybody's buying dips. Every dip in gold they're buying. That even lends more credence to the top side call of this market. In my view, you're going to see a significant break and a test. You're going to see a test of 3,500 first, and then more than likely a break over that level. Say, Shane, how can you say that? I'd say pretty easy. Right here, there's your all-time high. We're just sort of painting with broad strokes here, guys, but that's going to be 3,500. Just dial that in exactly. I don't like slowing down, but we got to do it. Okay, so something like this, that's your all-time high. So if you're holding longs right now, congratulations, you made a lot of money today. But if we're up about 1%, but this is sort of a breakout 1% gain. I mean, we've broken the key levels. We've broken sort of above this, and it was pointed out by Alan here is that you're 100% right. It is an ascending triangle, and what that is, we sort of showed you the bullish pennant on the monthly. But we have, sort of academy videos that really show you what an ascending triangle is. And this is an ascending triangle. It'd be something like that. You can see the top line, 1, 2, 3. I mean, like I said, these things aren't exactly perfect all the time, but that's the basic gist of it. There's your top line, trend line, something like this. There's your bottom line. You get that vibration in between those two trend lines, something like that. Boom. I mean, there it is. So, even if you wanted to get more specific and draw your trend line like that, that's a prettier one. But this spike high right there, that's spike high. And then there's your third test, your third touch. We talk about those a lot. Breakout's on. So it's a real question of what do you want to do? Do you want to buy right now? I think you could probably buy right now and get away with it. I just don't know that, we had so many chances to buy this market. We really did. And the best one was this one with the 4-hour. Did we get a chance today on this 920 cross? Hell yes. Right after the PCE 30-minute chart gave us the buy. Man, the 920 can be lethal when it's used in the right context. This would be a situation where I'd say, okay, there's my PCE bar. Take a look at your trade here. 30 minutes after your PCE, core PCE right there. There's your release. There's your long. Look at your stop. Beautiful stop loss beneath that swing low. Bam. I mean, that's what the strategy is built to do. You say, Shane, can I trust the reliability of the news bars? And I would say, yeah. One thing you got about on a news bar is you've got action, you've got volatility, you've got volume, you've got players, you've got participants. That's what you have to have if you're going to get a winning trade. Something has to drive the market. And in this situation, it's cheap. Look how cheap it is. You're there 34.16. Your stop out's at 34.03. That's $13. It's hammer time. We're going for it. I love that trade. Is it any better on the 5-minute chart? Something like this. Did we get a crossover on the 5? Should have been right there, and there it is. Where is it? 5:40 a.m. That would have been, 45 minutes before? Look at that. Then you made some real money, right? What I'm saying is it's always easy to go back in retrospect and look at these charts and say, okay, wow, that's so great. But really, if we had an idea of what was going to happen here, you got a buy signal, bang, take it. Not a bad trade. Not a bad trade at all. Let me see. Brian Lowell, why, with this impulsive buy, would there be any correction? Of course, there's always a chance of correction. There's always a risk of correction. So if you're trading, I'll show you how I trade. Short time frames, okay? I'm looking at intraday time frames, but I've got my macro levels mapped out. Now, this is key levels 101. It's no coincidence at all that today's high is at 34.50. None. Why? It's a half handle. It's a big round number. Now, is it as big as 3,500? No, of course not. But is it good enough to put a lid on intraday price action? Yep. So what we're getting right here is some compression around 34.50. That'll be our hot number going into Monday's trade, September's trade, essentially. Monday's Labor Day. We'll talk about that in a minute. But we definitely could get a big break coming out up over 34.50. And in my view, you've got about 2 lines in the sand. Now, if you wanted to be a stickler and say, Shane, where could I see some more short-term compression? The 3/4 handle, 34.75. So to me, this would be the game. I would have all of these key levels lined up on my charts, 100%. And I'd say, okay, what is price likely to do around this level? It's not likely just to blow through 34.75 immediately. It's not very likely. At least, on a 30-minute time frame, a 5 or a 1, typically you're going to see some vibration, and that's exactly what you're seeing today. No question about it. You've got a trend day up. You went right up to 34.50. The sellers have stepped in. They've put a short-term lid on this market. You're up about $2.50 on that trade if you took the short. The question is it going to break? Very, very bullish. I don't think 34.50 holds. I don't think that's the top of this market. It may be the top for today, maybe. But I think that we're going to churn, and when we churn, we're going to churn 34.50. We could potentially, even when the market reopens, and I believe spot gold will open for Monday's trade, even though it's Labor Day here in the States, you could see an open way up in here somewhere. 34.75, you could probably scalp that to the short. 3,500 is a big one. Now listen, once that 3,500 is where the war will be fought, in my opinion. It's a matter of time before we fight that out again. We've already tested that zone once. It was sort of a real swift test and then a rejection. We could definitely get compression and break above that. Once we break above 35, I'm bullish now, but I could still see a scenario where we go sideways for a while. But once we break 35, we're going up, and we're going way up. That's just sort of the way that those long-term pennants work. But gold is definitely the fascinating market of the day, no question. Let me see. John, can you predict the markets? How can you predict the markets? Sit in front of these screens for 10,000 hours. Nobody can predict accurately, 100%. All you can really do in the markets is design a stop loss that's conducive to give yourself a chance at success. That's it. Manage your risk, align your stops, and whatever the market does after that, the market does. But nobody can be a proper forecaster. A lot of the hustlers that you see online, I'll tell you their trick. What they'll do is they'll get on something like gold, and they'll just say, oh, yeah, gold's going to go up. And then it might be a day or 2 or 3, and then gold will go up. And they'll say, see, I told you it went up. You see that a lot with strategies that don't have stop losses. They won't cut their losses off. They'll just sort of wait for the market to go up and hit their targets, or go down and hit their targets. And that's, I think it's a form of fraud myself. You got to have a stop loss. But, yeah, that's a big one. You see that a lot in stocks. Let's see. Angelique, hammer time. Absolutely. Let me see. Tina, I should trade this news PC at 1:30 time. Yeah, we'll talk about the different economic events. PCE is a big one. It hasn't really done much to our equities markets today, just sort of choppy. A little bit of a correction in the NASDAQ. I'm not too concerned about it. As far as what we're looking at with regards to policy, PCE is a big deal. NFP, we got NFP live next Friday. That's a big deal. We just got to wait for the dust to clear a little bit, and then we can sort of make decisions based on that range. And I can show you how to do that. Let's see. Might break and retest. Yeah, absolutely, Brian. I'm thinking that you're going to break 34.50, and then we'll have a chance to buy 34.50. We'll break 34.75. We'll have a chance to buy a retracement, and then eventually we'll break the big dog's going to break, and then we'll have a chance potentially to put a position trade on, which, I mean, you know, in the land of interest rate cuts in 2026, in the land of Trump potentially running the FOMC, how do you do anything but bet on gold and inflation, you know? All right, second news event today, and this is a big one. Been covering this one all week. Fate of Fed Governor Lisa Cook still up in the air after a court hearing on Trump firing bid. A court hearing in Washington, D.C. ended without a judge ruling. Okay, so they didn't rule. There's no way that the judge was going to rule on this case during market hours. Wasn't going to happen. Be ready for anything over the weekend. Courts are strange. Now, this one's going to the Supreme Court. They wrote this great big long article about all the ifs, ands, buts, coconuts, whatever. The last line's all you need to know. You don't even need to read the whole thing. The Supreme Court is likely to end up resolving the dispute. Now, remember, the Supreme Court can hear cases anytime. I mean, they could send one up to the Supreme Court this weekend, and they can convene and get in there and do the work. I think that the big question is Lisa Cook going to be a voting member of the FOMC at the September meeting? That's what this is all about. This isn't necessarily about a person being removed eventually. This is about a person being removed right now. And what I told you about those two Fed governors, we had one that stepped down about 6 weeks ago, that the resignation was effective immediately on August 8th. They're gone. Lisa Cook, if that's another vote, that's gone. That's two Biden appointees that are gone off that committee. Who would even vote? They've got to have alternates. They've got to have people ready to step in. But how is all this going to work? Nobody knows. It's never happened before. Nobody knows. So that's some uncertainty. That's also going to send gold a little bit higher. But this is a big deal. Now, what happened today was there was another criminal referral put out by the FHA housing director, Schulte, I believe the gentleman's name is. So a criminal referral goes to the DOJ, and then the DOJ, they investigate, right? Well, this was a third one. This was a third one against Lisa Cook. And supposedly the mortgage documents and everything were in there, and there's a third home. There's a third home. So there was two homes. Remember, there was one in Michigan and one in Atlanta. Now there's a third property that's coming to pass. They've got the documents. Lisa Cook looked like she's just buying time. That's what it looks like to me. It's an unfortunate situation because it's a very serious job, very serious, but difficult. You can see right here, that's just definitely a lead story. There was one other thing in here that I was going to cover, but it looks like it's gone. It was Americans. Let's see, a bit right there. Americans expected to bet on a record $30 billion in the 2025 NFL season legally. Now, I have to do this because college football season kicks off en masse tomorrow, so I'm a big college football fan. But $30 billion, and that's a big deal. Absolutely huge deal. $30 billion legally. When I was growing up, betting was illegal here in the United States. You couldn't bet. You had to go to Las Vegas. Well, here's some analysis that I did in the old days, and I did this on a not a YouTube, but an X video, a video that I put out on X, and I believe this was a YouTube short as well. But you see my Fibonacci's. I even used a different font and everything back then. And the basic strategy was what? It was a bullish pennant right here on a monthly chart. There was your 6-month rally. This is for DraftKings stock, which is a big-time sports book here in the United States, one of the big players. There was your pull, and there was your 3-month compression, and there was your break. So basically, we were saying buy 30.65s, and you can see it's sort of been a rocky road, but revenues are definitely churning higher for DraftKings, 47.68. So that would have been good for about a 30-something% hit if you actually went long back there. God, when did that video come out? That one came out in November of 2023, so almost 2 years ago. So it was a pretty good play. But you can see that the way that the fundamentals can drive the chart patterns. The reason why I pulled this up today was I saw the story and I was a little bit interested in it because I'm an old sports gambler and I'm also a big football fan. But the compression on the monthly chart, this is kind of what I'm expecting out of gold, to be real honest with you. A monthly compression pattern really just screams that you're going to get that big-time rush and break, and interesting stuff. So I don't just think we're going up a little bit over 3,500 for gold. I think we're going up a lot, But if 3,500 holds, it could be an intermediate term swing top for another year. We just got to wait for it to break and see what happens. Silver. Silver's a big deal. This is the big one. We talked about it, 40. Unfortunately, I didn't get my trade idea out, and that's just sort of the way of it. But we talked a little bit about what could happen with silver. And your high today, right here, this is a 4-hour chart. Your high's at 39.96. And remember our key level of 40. We talked a lot about that. I would be very surprised if we trade above 40 today. We've already pulled back to 39.77. So for me, the game plan's relatively easy. Very bullish here. Very bullish 4-hour chart. If you wanted to trade silver, I would be looking to get long, really without any apologies right here. I love being able to lock in on that right at 40 because we're not done trading 40. We won't just reject it and fall way off. We're not done trading it just yet. Very bullish. Bullish break on the 4-hour, 38%, 39.50 potentially. A fantastic entry point, 39.50 on a pullback. Yeah, yes, please. I'll take that one. A lot going on today. One other thing we need to cover here, actually two other things. Right here, E-mini S&P 500 15-minute orb. Right there's your open. There's your thing, bang, there's your entry. And you can see after that entry, it's just been a nightmare. Take a look at how much different it is, though, from the NASDAQ futures. Something like this. We got opening bell, opening 15. Look how big that range is. Being an orb trader is not always easy. You had a real big decision to make with an opening 30 minutes that's that big of a loss, about 0.6% loss. Is it worth taking this trade, betting on a big trend day down? It's really hard to do that on a PCE day, especially with equities, because a lot of times you get an initial reaction on your PCE, which is where? Right there. Look at the volume. Little head fake to the top of the market, compression, break, and then you get the big sell-off, and the question down here is, man, am I going to sell the bottom right now? Do I believe this is going to be a big trend day down for the NASDAQ? Why would I think that? Challenging, guys. I'm of the opinion that when you get a big 15-minute orb like this, man, I'm looking for secondary entries. I'm looking for stuff like this potentially, maybe right up in here, maybe 23,563, something like that. Because your entry point down here, you really have to see a major trend day down. And where would you be targeting? Where would your profit target be? It's got to be down in here somewhere, which means we've already filled in this big runner from last Friday, right? It would have to be down in here. That's a big trade. I don't know, guys. I don't know. That's a challenge. All right, guys. Let's see. Let's go right here. Let me see. Angeli. All right, let me see. Brian Lowell, I've been watching you for the past 2 lives, but I am not familiar with the indicators you use. Could you please show me how it works? Yeah, Brian, we're going to do some more workshops and things. The indicators, the best thing to do, if you want to know about the 920 EMA crossover, is to go over to the How to Trade Calm YouTube channel and watch that video, the 920 EMA cross, and then watch some of our live stream workshops that we've used there. That's a real basic way of doing it. Now, the way that I do things is a lot different. It's called the Fibonacci counterpunch. I use Fibonacci retracements, and I use Bollinger Bands and a 13-period EMA. That's sort of the way that I look at the market, and you're going to have to go to the How to Trade trading room and go to the Elite Traders series and click on those and watch the 5 videos, and I sort of break down how to do that on those videos. Definitely going to – I understand if you don't have any background on it, it's really tough. Best thing I could say is get into the How to Trade trading room, start watching some of the educational videos, and get up to speed on some of what I'm talking about. The other thing would be the How to Trade Calm YouTube channel and some of the strategy videos you can certainly get in on. Let me see. I understand if you're confused. Believe me, I get it. Angeli, wait for break and retest gold. Yeah, that's what I would say. Listen, you can go long right now if you want. You can do it. It's just remember that that could be stubborn right there. 34.50 could be stubborn. We're pulling back right now. So these traders that sold that, the scalpers, they've done fairly well. The question is when do we go above 34.50? Is it Monday? Do we open above there? Could be tough. So I would be, if I wasn't already long from down in here right after PCE, I'm not going long now. It's too risky. Let me see. Yes, sir. Thoughts on the 920 sell on the yen daily chart? Absolutely. A couple of things that this sell has going for it. This sharp pattern is a big deal for me. A lot of people would call that an inverted hammer, a hanging man. It's basically the hammer formation I was talking about earlier, except it's inverted. And you have the sell signal. Now, the only thing that's really working against us here on this yes, sir, is this. And we talked about this yesterday. This. That RSI is just dead. It's absolutely dead. It's at the 50. It's at the 50-yard line. We're printing right around 50. Now, on a daily chart with a Forex pair, you do not need, in my view, maybe somebody out there will probably tell me different, but you don't need RSI confirmation. The ranges are big enough. So if you're short here, it's real simple. Stop loss is right above that inverted hammer, and you're looking, you're going for the gold. You're going, you're waiting for this compression to break and maybe fill you in somewhere down in here. That would be the trade. Realistically, that would be the trade. So what are the catalysts next week that could send us there? NFP on Friday. NFP on Friday. Absolutely. I like the trade. That's what I would call a value trade, guys. So if you were value trading, and what I mean is trying to get a deal on a good trade, that's it. Why? Because the stop's nothing. I mean, let me rephrase. The stop is something. You can always lose a fortune on any of these things if you're not using your risk management. 1 to 3% on any given trade. And I understand that is a significant stop loss there. 148.22, you probably got your stop loss up there at like 148.29. I would not put it underneath the quarter handle. It'd be somewhere probably right up in there maybe. Okay, so there would be your stop loss. There would be your entry right around 147.37. So you're looking at about 100 pips. So we've got to get at least 100 pips for our trouble, at least. So we've got to get at least 146.37, something like this. Wherever it is. Yeah, right there. This might be a 1 to 2 though. This might be a smart money concept trade where you're looking for that rally base rally. Maybe you return to that rally base rally zone. Really, the art in being a profitable trader over the long haul is going to be where you're putting your profit targets and your stop losses. Right now, I'm in love with that stop loss. Love it, absolutely love it. I know that if this thing reverses and takes out that inverted hammer, okay, game's over. We're probably going to break to the top now, and that's great. That's probably going to give us another crossover. Then we'll just flip and we'll go long. I don't have a problem with that. The beauty of it is it's right there and it's definitive. But what makes that trade better than a lot of crossovers is it's an inverted hammer, and I have an affinity for those hammers. I like them. I like them a lot. Like we said earlier, it's hammer time. So there you go. Let me see, Angeli, I think you should make a 920 indicator available on TradingView. When I try to do it on own AI, there's too many errors. I wish I knew how to do that. Maybe just make it a public script or something. I'll look into that. That's a good point, though. I'm surprised the script just doesn't work for you, though. I've had a lot of folks that just run the script. I posted in the comments section, and it's worked for them. So maybe just delete it and try it again. That's what I would say, Angela. I know a lot of folks that have it up and running. Let me see right here. It would be nice. Well, let me try to figure out how to do it. Maybe I can. Maybe I'll need to get some tech help. All right, everybody. Interesting session today. The Lisa Cook saga is driving participation in the market, so be very careful if you're trading over the weekend. Also, remember it's Labor Day in the United States on Monday, so U.S. markets are going to be closed. I'm going to be here. I'm going to be here streaming, so if you guys want to tune in and talk a little shop, I'm more than happy to do that, set the table for the week ahead. We're going to be looking at NFP as the big mover and shaker that Friday. So next Friday, NFP. We've got a lot of things planned, though. We've got some trading. I believe I have a workshop going on Wednesday. We got the first trading day of September. I have that on Tuesday. It's not Monday. It's Tuesday. Tuesday is going to be interesting. Liquidity providers will be back off a holiday, potentially from the summer, and that's going to be interesting. Now, sometimes the first week after Labor Day can be slow. It can be. But I will say that the following Monday will be guns up. It'll be all systems go. Wednesday we have the Switch Markets Live Trading Webinar Series, Fibonacci Trading Strategies. If you want to learn about Fibonacci's, I'm going to show you exactly how I do them, how I trade the Fibonacci's and a few of my rules, probably go over my counterpunch strategy. That's my own personal secret sauce, but I'm more than happy to share it with you guys. Trading a hot Thursday news cycle on Thursday. We got a lot of key events. The stream's going to be a lot of numbers, a lot of economics, and we'll be able to dive right in and do what we got to do there. U.S. non-farm payrolls live's the headliner Friday, though, so I got to get up at 4:30 or so in the morning and get prepped and ready. But we're going to trade that. We'll trade some live strategies, too, as well, probably the 9 EMA and the 920. However, we may do some Fibonacci's. I haven't done any real short-term Fibonacci's in quite a while, so we may, in fact, do that. Other than that, guys, it's been really been a great August. A lot of good things happened in August. Some bad things happened in August, but it really did start to reflect the dog days of summer, meaning business was slow. And we need to be patient with these markets because they will open up. But we also have to really say, okay, what do I want to get out of the next 6 weeks? Well, the next, 10 weeks. How's that? I'll give it 10 weeks. Basically, a real strong trading month toward the middle to late September. October is typically just a great month to be in the markets. Seen a lot of market crashes in October, which is great for us because we're active traders. We can get in there and get the job done. And then as far as November goes, typically the first 2 weeks of November are very good as well. And then we start winding down the year, the trading year, and getting ready for 2026, which could be very, very different than 2025. So there's a lot to look forward to. If you're thinking of getting into the prop business and going with the prop, September after Labor Day is a pretty darn good time to be going prop. Not bad. You're going to have a lot of volatility there. Maybe the next week, maybe a week from Monday would be a good one to start a prop account or prop challenge. Nothing wrong with that. So I think we're going to be in pretty good shape with action. It has been slow in August, though. But we've seen some developments that really make us think that the future is going to be incredibly volatile. And I don't see any way out of inflation. Gold right now holding on at about 34.44. That looks to me like we're really going to get a kick there. Would not shock me if it comes next week. Is there any way that the U.S. dollar can gain any ground when we see turnover at the Fed and we see the interest rate cuts coming like we think they're going to come? I don't know. I really don't know how the dollar survives this without being fundamentally revalued. I don't know. We're just going to wait and see. All right, guys, I'm going to go ahead. Let me see. Angeli, I'll try it again. It does look like a great indicator. Yeah, give it another shot. Just what I would do is when you're making the indicator, just cancel it and go make a new indicator and cut and paste that script in. And I think it starts on like line 4, I think. Something like that. Check the video out. Watch exactly where I put it. It'll work. Blue Mango, do you prefer Fibonacci's to pivot points? Absolutely. Yeah. I like pivots, though. I mean, I have formulas. I call them range formulas that I use. Essentially, they're pivot points that are outside of price action that I really like. I also have a set of intraday pivot points that I use on WTI crude oil that are designed to really harvest the power of a breakout type of a scenario. Those are proprietary, though. I don't disclose those or I will get sued. Absolutely, Famey. Thanks, Coach. Blue Mango, yeah. So Fibonacci's are what I like. Bobby Bob, Shane, I'm a bit late. We'll rewatch. Yeah, we went long today, about an hour, but it's Friday, so I figured we might as well get our money's worth before the weekend. All right, everybody, I'm going to go ahead and sign off for the week. We'll be back on Monday. Monday, we'll be back. Probably have a trade idea out here in the next several hours. May just be a recap of the trading week, though. I'm watching that Great Britain Pound Aussie closely. I want to see if we get any kind of love there at all. Bullish close above that 50 level will be good for that trade. If you have any questions at all, head on over to howtotrade.com. Send me a private message. I will get back to you. As far as where we're at and where we're going to be, who knows? Who knows? But we know September's right around the corner. And this coming into this type of the year, we're going to have some interruptions this year because I'm going to be out of the office for like a week, something like that. But we're going to have some really good trading conditions. And I'm excited. I always get excited for September and October because it really is when we kick it into high gear. And that's, I mean, you believe me, I'm not lying to you and I'm not kidding you. You can make more money on the latter half of September through October and the first 2 weeks of November than you could have since Memorial Day, since May 31st. There's no question about it. You'll have many, many more opportunities. That's it. All right, guys, I'm going to go ahead and kick off. Blue Mango, you're absolutely welcome. Sapadilla, you're absolutely welcome. You guys have a fantastic weekend. Trade the action well, and we'll talk soon. See you.